Most traders enter trade too early. They get reversal and get punished. Smart trader wait for confirmation, and that confirmation is called break of structure. So what's up, guys? So yesterday we talked about, I gave the introduction on SMC. I taught you people about SMC. I told you guys how smart money moves the market and how to trade smart also. So today I'll be explaining break of structure, because it's also one of the confirmation that smart money traders need to see before entering a buy or a sell. They don't just because they are a smart money trader, they can enter from anywhere. No. So break of structure also is very important. Okay, so let's start by what is break of structure. Break of structure of simple means price has broken an important high or low in the direction of the trend. Price has broken an important highs or low in the direction of the trend. Mind you, still aligning with the trend, not that breaking against the trend, still aligning with the trend. Break of structure tells us one thing clearly: the trend is continuing. You can get, whenever you see a break of structure, whenever you are trading to the upwards direction and you see price breaking structure, that is clearing this guy. It simply means that the trend is continuing. There is no change in trend, there is no change of character or any other thing. The trend is still bullish. So whenever on your charts you see something like this, then be rest assured that okay, we are still bullish. So break of structure just tells us that the trend is still continuing, it's still in an uptrend. So once you understand break of structure, you will fight, you will stop fighting the market. Once you understand break of structure, once you understand what break of structure is, once you understand how to apply break of structures in your charts, definitely you will stop fighting the market. You will stop dragging trends with the market. You will keep aligning with the trends, because break of structure just tells you that the trend is continuing, it's not changing. Okay, so let's explain bullish break of structure. Most of you have seen on my shorts videos where I enter a sell or a buy from a certain point. Yeah, that is from a break of structure. So if you go back to my short videos and you see where I take a buy from or a sell from, you will always identify a break of structure there. You will always identify an order block there. So what is bullish break of structure? Bullish break of structure in the bullish market, price makes higher highs and higher lows. Higher highs and higher lows. Mind you, not lower low and lower high. Higher highs and higher lows. Higher highs and higher lows. So that is a bullish break of structure. When price breaks above a previous high, that is a bullish break of structure. When price breaks above a previous high, that is called a bullish break of structure. Whenever you have a break above this high, that is a break of structure. This is a zone that is like, okay, let me just say a support zone or a resistance zone. Okay, this is a resistance zone for the buys. So whenever you have a break above this resistance zone, then a break of structure just occurred there. And what else do you need to look out for? The only thing you need to look out for is for price to come down to an order block, then break structure again. I don't know if you get me, guys. So whenever you have a break of a high, that is what we call a break of structure. This means buyers are still in control. Yeah, this means buyers are still in control. The change hasn't trend, it hasn't changed. Buyers are fully in control of the market. we look for buy setups only, not sell. This is where many traders made mistake, because whenever you see a break of structure in the market, the only thing you need to be looking out for is just a buy structure. You only need to be looking out for a buy structure, not sell structures. You understand? So whenever you get a break of structure, you know you need a reversal down to your other block, then a break of structure also. Okay, so guys, that is that for a bullish break of structure. So coming to a bearish break of structure. In a bearish market, price makes lower lows and price also makes lower high. In a bearish market, price makes lower lows and lower high. Lower lows, lower high, lower lows, lower high, lower lows. So that is what price makes on a bearish market. So when price break below the previous low, that is a bearish break of structure. As I illustrated using a bullish break, same thing applicable to a bearish break of structure. Whenever you get a break of structure to the downside, then all you need to look out for is for opportunities to sell. That also tells you that sellers are still in controls. They ought to be more of sales before any other thing might occur. So whenever you get a break of a low, that is what we call a bearish break of structure. That is what we call a bearish break of structure. This also means that sellers are still in control of the market. So whenever you have a bearish break of structure, it tells you that okay, sellers are still in control of the market. You understand, guys? It tells you that sellers are still in control of the market. All you need to be looking out for is a sell setups, not buy, because many people, they normally make this mistake that keeps them in a cycle of unprofitability. You have a bearish break of structure, then why is someone looking for buy from here instead of sell? Because this break of structure tells you that sellers are fully in charge of the market. So why are you looking for buy opportunities instead of looking for sales? So you have to take note, you have to take that as a correction. Avoid sell, avoid buy positions when you are having a series of break of structure to the downside. The only thing you are meant to look out for is a sell position. I don't know if you understand me, guys. The only thing you need to be looking out for is a sell position. So these are the common mistakes that most traders makes. Many traders makes their break of structure wrongly. Many traders marks their break of structure wrongly. Okay, in a situation whereby, let's go to our live chat now, guys. Let's go to our live chat. Come on, let me go to a lower time frame. Okay, let me just leave it at 4 hours time frame. Sorry guys, this is a rough sketch. Okay, as I was saying, whenever you have a break of structure, price normally comes down to your other block. Okay, for example, this is in a bullish trend. We had this break of structure here. We had this break of structure. Then what did you see price did? Price came down all the way to the other block that caused the break of structure. Guys, this is the reason why I said you should subscribe to the channel, because me talking about that block now, you won't understand, but on our next video I'll explain what other block really means. But for the meantime, I'm just trying to illustrate what break of structure is. So this is a break of structure. So the only thing you are meant to be looking out for is just buy. Okay, you having this break of structure here, you entered your buy from this point. You entered your buy from this point. You can see that you are still running in profit, because definitely gold will take out this high. This is the high we are expecting to take our profit, to clear out this high. You understand, guys? But I'm just trying to illustrate what break of structure is. Okay, coming down here again, I think that is on a 1 hour time frame. Let me go down to a 1 hour time frame. As I said, guys, the only thing you are meant to be looking out for is buy opportunities. Oh, network. The network is bad. Okay. So what can we see here? You had this break of structure here. You had this break of structure here on a 1 hour time frame, mind you. Then what do you see? Price came all the way down to the other block. Okay, let's take for instance now that you had this break of structure and you are looking for sell opportunity from this point. Can you see that the market already stopped you out? Because you are not meant to sell, you are meant to buy, because that is a bullish break of structure. The only thing you are meant to look out for is a bullish move. You are only meant to look out for a bullish move. So the only thing you are meant to look out for is a buy to take out this high. I don't know if you understand what I'm saying. On a bullish break of structure, the only thing you are meant to look out for is a bullish move. You are only meant to look out for buys. While on a bearish break of structure, you are meant to look out for sells. You are meant to look out for sales. Okay, let's use this as example also. You had this break of structure to the downside for the bullish move. You had this break of structure to the downside. Then what do you see the price did? It gives a sell move. You understand? It gives a sell move. So the only thing you are meant to look out for is just bearish move. You understand? So that is it for a bearish break of structure. You understand, guys? That is it for a bearish break of structure. That is it for the illustration. Okay, sorry guys, I switched network. I switched data because of the network. So common break of structure mistakes that many traders does was they marked their break of structure wrongly. Here are common mistake: marking break of structure in a ranging market. Very bad. Avoid trade. I already told you when I explained about trend. Avoid ranging markets. So stop marking your break of structure on a ranging market. Just avoid it. Using small wicks instead of clean candle close. Most traders, they mark their break of structure using wick instead of a candle body. So avoid that also. Ignoring the higher time frame. Higher time frame is the key. Take note. Higher time frame is the key. Higher time frame is the key. There is a reason why I'm emphasizing more on this higher time frame is the key, because higher time frame will give you the clear direction on where market is going. It will take away so many noise are happening in the lower time frame. So higher time frame is the key. True break of structure is best confirmed by a candle closed beyond the structure, not a wick. A candle closed. How to use break of structure correctly? Here is how smart money traders use break of structure correctly. Number 1, identifying the trend on a higher time frame. Identifying the trend on a higher time frame. Number 2, waiting for BOS, which is break of structure, to confirm direction. Not that you see a bullish break of structure on a bearish trend. No, you wait for it to confirm direction, then you can use it, and you after using it you have your profits. Then thirdly, then look for entries on your lower time frame using order blocks and liquidity. Yeah, so today guys, we just talked on break of structures only. So by tomorrow I'll be talking on change of character, then also order blocks and liquidity. These are all the criteria which you need to understand as a smart money trader. These are all the criteria which you need to understand. So guys, okay, I want you to pay good attention to this. If it's possible, take up your notebook and jot this down. Please guys, listen carefully. Break of structure tells you the trend is continuing, but what happens when the trend is changing? That's called a change of character. So guys, as I said earlier, by tomorrow I will break down change of character and show you how to catch trend reverse early. Guys, you won't miss this. I don't think you will have to miss this, because any part of the journey that you skip will really affect you, and you will have to go back to start afresh. So it's best for you not to skip this. So what you have to do is to like this video, subscribe to the channel, and drop down below in the comment section break of structure. Then by tomorrow I'll explain what change of character is, and also tell you how to trade change of character and catch sweet A+ setups using reversal. So guys, I believe that will be end for today. Stay safe, trade smart, and do ensure to protect your capital. Thanks guys, peace and love.